Good afternoon all. Thank you for attending PayFit's webinar on upcoming changes for the 23-24 tax year and what you can do to prepare. We appreciate you taking the time out of your day to attend, and we hope you find all this informative. We'll just give it a few moments just to see if anyone else joins, and then we will get started. Okay, we can still see a few more people joining. Okay, fine. Well, we'll just get started then. So during this webinar, a chat box will be available for you to post any questions you may have. We will allocate, if possible, 10 minutes prior to the webinar finishing, answering your questions, but if we do not get through them all, we will reach out to you privately. I will begin to introduce myself. My name is Ian Hunter-Moyer, and I am the Implementation Manager at PayFit, where I oversee all the onboarding projects for our customers. I have 11 years of experience in payroll, having worked in both public and private sectors, but I specialise in implementations and data reconciliations. Rebecca will now provide you with a brief introduction to herself and her experience.
Hi, I'm Rebecca. You have to excuse the eye patch. Obviously, this is the right time for me to injure my eye. And I'm very happy that this will be recorded and sent out to everybody as well. A little bit about me. I'm the payroll expert at PayFit. I'm responsible for ensuring that the product remains legislatively compliant and also for the payroll and product knowledge management at PayFit. I enjoy interpreting complex HMRC legislation and explaining it so that everybody can understand it. I've been in payroll for over 13 years, so before RTI and automatic enrollment were even a thing. I've worked with other payroll software providers, I've worked in bureaus and as an in-house payroll manager as well. I hope you'll enjoy the updates that we have to share with you. We're going to start with a quick poll. So you should receive a poll. If you click on apps in the bottom right, you should then be able to click on polls. And we're asking, is this your first time running payroll year end? Yes, no, or no, but it's been a while. I wonder if the poll is actually available.
No, the poll's available, yeah, the votes are still coming through, yeah.
Thank you.
Just give people a few more moments to vote.
Mm-hmm.
Okay, can you see the results, Rebecca? If not, it's okay. It's okay. So what we've got is we've got 24 votes in. We've got 39% have said yes, 35% have said no, and 26 with no, but it's been a while. So it's kind of roughly across the board that everyone's kind of on the same page. But hopefully after this session, you'll be more confident enough to be running end of year. Okay, so we'll now move on to the first part, which is key dates. So on your screen at the moment, you'll see the key payroll dates are listed for you. So the very first one we can see is the 6th of February to the 5th of March, which is your P9s. So the P9s are currently being issued by HMRC online, or if you receive your tax codes by post, you'll start receiving them in the post. And you will continue to do so until the 5th of March. P9s are the tax codes for the new tax year. As a reminder, if you do not have any tax code changes for employees in April 2023, you'll have to roll forward their existing codes to ensure that all codes have a cumulative tax basis. It is recommended to download all new tax codes first when your April payroll is open, then roll over the tax codes that have not been amended for 2023. The next key date we've got is the final FPS. So you have to make sure your final FPS is submitted to HMRC alongside your EPS, which should have the indicator ticked to tell HMRC it is your final submission for the year. We also have the new minimum wage and living wage rates applied from the 1st of April. We also have the new statutory paternal rates from the 2nd of April. And we also have week 53. This may not affect everyone, but just as a reminder, week 53 occurs if your regular pay date for weekly, fortnightly, or 4-weekly paid employees falls on the 5th of April. This is because the number of days in the tax year doesn't divide into a whole number of tax weeks. Just as a reminder, employees who will be paid in week 53, which will be payment date of the 5th of April 2023, should be taxed on a week 1 tax basis, as they'll be given an additional week of tax allowance, as HMRC only accounts for 52 weeks or 12 months. This also stops any tax refunds generating in week 53. This means employees, after the tax year is finished, will receive a P800 from HMRC due to the additional allowance and will be paying back in the following year. If this is something you are affected by, please communicate with your employees about the effect it may have on your tax next year. From the 6th of April, we have the main payroll legislation changes. The 19th of April, again, is your final EPS, so ensuring that your final indicator has been ticked. And then the 22nd of May for your first payment to HMRC relating to April.
Okay, we won't focus too much on benefits in this webinar, as it's a much bigger topic that we'll cover in our communications over the next few weeks. However, there are a few dates coming up quite soon, so just wanted to mention them as a reminder. If you plan to start payrolling your benefits in the 2023-2024 tax year and you're not already registered, you'll need to register by the 5th of April. Similarly, if you plan to set up a PAYE settlement agreement, that is when you are paying the tax and national insurance due on any benefits on behalf of your employees, you'll need to register for one of those by the 5th of April as well. If you're submitting P11Ds for the 2022-2023 tax year, so the one that's just ending, you'll need to provide the P11Ds to employees by the 6th of July. You'll also need to submit them along with your P11DB to HMRC by the 6th of July as well. If you have any Class 1A national insurance due on any of those benefits, whether that's payroll benefits or P11D benefits, you'll need to make that payment by the 22nd of July or the 19th of July if you're paying by check. And then if you have any liability to pay on your PSA for the 2022-2023 tax year, you'll need to pay that by the 22nd of October or the 19th of October if you're paying by check. Okay, so we're going to cover the upcoming changes for the 2023-2024 tax year. I'll pass over to Ian.
Thank you. As you can see on screen, you can see the tax thresholds and rates for Wales and the rest of the UK, which would be England and Northern Ireland. The personal allowance for the UK will remain frozen until April 2028. The original expiry date for this was 25/26. That means the tax code of 1257L still remains the same until then. So any new starters or anyone starting with your business what has to be placed on the emergency tax code will be placed on 1257L for the future. The most significant change announced was a reduction of the threshold for the additional rate of income tax from 150,000 to 125,140 as of the 6th of April. It is estimated that approximately 250,000 taxpayers will be pushed into this higher tax bracket in the UK, excluding Scotland, paying 45%, whereas in Scotland it will be 46%, any come exceeding the new threshold. Mr Hunt has stated that reducing the additional rate, a person earning 150,000 or more will pay an estimated 1,200 per year in income tax. In addition, in Scotland it will be slightly higher. In Scotland, income tax for higher earners will increase. The higher rate of tax will increase from 41 pence to 42 pence, and then the top rate will increase from 46 pence to 47 pence. So it's just a reminder to ensure that your payroll system has been updated with the new rates. As you can see here, the rates for the thresholds. So again, the only change that's been made is the effect on the top rate. The beginner, basic and intermediate rates will not change in Scotland. So everything's remained the same except the top rate of tax and that the change to the percentages.
Okay. So firstly, just to confirm that the Health and Social Care Levy, which was supposed to come into effect from April 2023, was scrapped in November 2022, so there is none of that this year. You'll see in the table that the rates that we've been using since November 2022, when that was scrapped, are the rates that we'll continue to use into the new tax year. So for the 2023-2024 tax year, national insurance rates for all employees and directors returned to the pre-2022 levels before Health and Social Care Levy was ever a thing. We have no new national insurance categories this year. We're just going to stick with the 13 categories that we already have. As you can see, the monthly and annual thresholds for the employees haven't changed at all since the end of the 2022-2023 tax year. They're all remaining the same. So not much to mention here. It means that employees won't see any difference in the amount of national insurance that they paid between March and April, even though we're in a new tax year, where in any other tax year, normally they would notice a change. However, directors' national insurance is a little bit more complicated. We'll cover more about what you'll need to do at the end of the tax year later. For the new tax year, due to the mid-year changes to the primary threshold and the rates, directors finished off the year with a hybrid primary threshold and a hybrid rate. Now that we're starting the year with a new primary threshold and back to the usual rates, directors' national insurance, the annual thresholds and the rates will now match those for an employee. Just a final note on national insurance as well. So Class 1A national insurance Class 1A national insurance on company benefits and on termination payments over 30,000 will return to the 13.8% rate. The Class 1B national insurance rate as well will also return to 13.8%, and that's national insurance that's due when you submit a PSA or a PAYE settlement agreement. They were previously 14.53%, which was a hybrid rate based on the rate being reduced partway through the previous tax year.
Okay. Thanks, Rebecca. Now you can see the student loans for the 23-24 tax year. There will be a rise to 22,015 for the income which affects Plan 1 borrowers that had taken out loans prior to 2012. Those who are over the previous threshold will have an extra £152 per month free of student loan calculations. It's been decided that income threshold at Plan 2, where borrowers who took out a loan after 2012 will remain unchanged at £27,295 per annum. There will be a rise to 27,660 as income threshold, which Plan 4 borrowers are required to begin making payments out on loans taken out in Scotland. Those who earn over the previous threshold will have an additional £191 per month free of student loan calculations. The government has also confirmed that Plan 3, or also known as the postgraduate loan, threshold of 21,000 will remain the same in the new tax year. No changes have been made to the percentages, so for Plan 1, 2 and 4 it will be 9%, and for the postgraduate loan it will be 6%.
Okay. From the 1st of April, rather than the 6th of April, we have an increase to the national minimum wage for all ages. You can see that the minimum wage rate for employees aged 23 and above, which is also known as the national living wage, is being increased to £10.42. The apprentice rates and the under 18 rates are both increasing to £5.28 as well. All of the rates in between have been increased. But don't forget that these rates take effect from the 1st of April, not the 6th of April, and also from the first full pay reference period on or after the 1st of April. So if you're not paying your employees in April for hours worked between the 1st and the 30th of April, you might find that you have to pay those rates later. Of course, you're obviously welcome to pay the higher rates earlier than that if you want to, but you don't have to.
Thanks, Rebecca. On the screen now we can see the newest statutory pay rates for the new tax year. All statutory payments will continue to be calculated at 90% of the average weekly earnings for the first 6 weeks. Thereafter, workers can anticipate a statutory weekly rate of either 90% of the new rate of 172.48 or whichever is lower, and that's an increase from the 156.66 from last year. If you have issued any maternity schedules to employees, it may be wise to issue new ones out due to the rate changing for the new tax year. You should remember that to start charging the new rate on the first Sunday of April 2023, which is the second, and to pay for the entire week following that Sunday. So, for example, if they started on a Wednesday, their statutory week runs from Wednesday to Tuesday. Therefore, the new rate is only payable from Wednesday, the 5th of April. On the 6th of April, the weekly rate of SSP will be increased to £109.40 from the previous rate of £90.35.
Okay. The qualifying earnings thresholds for use with pension schemes that are calculated based on those thresholds are not changing this year. It also means the trigger point at which an employee should be enrolled isn't changing either. It might be worth mentioning now, though, that a bill has been passed so that the legislation might be changed in the future to lose that lower level of qualifying earnings. It means that employees will pay pension from the first pound that they earn. And the same bill also backs lowering the automatic enrollment age from from the age 22 down to age 18. So meaning that those younger employees are going to stop saving into their pension a lot earlier.
Perfect, thank you. So some final changes to look over. So the HMRC liability. So you may be aware of this change already, but HMRC, after feedback from employers, have amended the date when you can view what you owe them on your online account. The original date was the 12th, and this is now the 10th. If that falls in the weekend, it will be available to view the Friday prior to, which is also a change that a lot of employers have been asking for. The employment allowance remains as £5,000 per annum. Obviously, a reminder is to please ensure to check your eligibility for this reduction via HMRC, and remember it can only be claimed once, and this is done via your EPS or your employment payment submission on payroll. There should be a toggle on your system to do this, but if you're not too sure, please reach out to your payroll software and they'll confirm it for you. The apprenticeship levy allowance remains as £15,000 per annum. As a reminder, your company is only entitled to this allowance as a whole. If you have any additional companies connected, then the allowance will have to be split or can remain on the main company, but the other connected companies would have to pay the full levy value without any allowance taken off.
Okay. We're now going to cover what we think you should do to prepare for the new tax year. So we're going to start with what you should do before the end of the tax year. Firstly, directors' national insurance. So if you have any directors who are paying national insurance on a non-cumulative basis, their national insurance is calculated per pay period until the final pay period of the tax year. In the final pay period of the tax year, that's when it's going to recalculate based on an annual basis. So at this point, because of the changes to the thresholds in July and the rate changes in November, you're going to see that the national insurance is very different to any of the previous months. In some cases, there might even be due a refund. This is entirely normal, and we saw this happen with cumulative directors immediately in November once those rates changed. The best thing you can do is to check the national insurance calculation as soon as possible, so you can be on the front foot and let them know in advance. In PayFit, as soon as you've closed off your February payroll, you're then in your March payroll, and you can go in and take a look at their national insurance and check what it looks like compared to last month. You can also view a payslip. If you also go into the payslip breakdown section, you'll be able to see a breakdown of the national insurance and how it's being calculated as well. I think if you reach out to those directors before they're paid, they're less likely to have lots of complicated questions for you if you can give them that advance warning. Next, national minimum wage. So you should be checking now which of your employees might need to have their pay increased to bring them back in line with national minimum wage. Once you've identified which employees need a pay increase, you can communicate with them ahead of time before they even think about asking. You'll also want to look at their employment contracts and make sure that their newest salary is included. And you should also check when you need to apply those rates, because as I mentioned before, it might not even be as soon as the 1st of April. For employees on parental leave, as Ina's mentioned, if you provide an estimated payment schedule for an employee, for example, on maternity leave, you'll want to give them a new schedule that will include the new statutory rates. If you have an employee who is on parental leave and they have an increase because of the national minimum wage increase, you might need to apply the alabaster ruling. So you need to apply this if they receive a pay increase between the qualifying period, which is 23 weeks before the baby is due, and the end of their maternity leave. And that's the unpaid part of their maternity leave as well as the paid part. So there's a good year and a half, basically, where this could be applied. So if they receive a pay increase at any time between those two dates, you're going to need to recalculate their average weekly earnings to take into account that increased salary. This will likely increase the amount of statutory maternity pay that they should have been paid. And in some cases, it might mean that although they weren't eligible before, they are now. If you use PayFit, there is a Help Centre article available to you, and it will explain what the alabaster ruling is, how to calculate the adjustments, and where to enter it in PayFit.
Thanks, Rebecca. We'll now go over what to review on the start for the new tax year. So the first one is the higher tax for higher earners, as we've already discussed. In the UK, this is reducing to the 125,400 per annum. So it would be smart to have some internal communication sent out to your employees and to be ready to answer any questions on the calculations of this. We also have an additional bank holiday in a year for the King's coronation on the 8th of May. So it's important to check employees' contracts to see if they are allowed to take this off or if they work on it to have it claimed back. The claim for employment allowance, so as discussed, it would be wise to check to see if you are able to claim the employment allowance from HMRC. And also small employers relief. So small employers relief may be available to you if your total national insurance contributions for the year 22-23, including both employer and employee contributions, amount to less than 45,000 per annum. You can also get an additional 11% of the statutory paternal pay you give out. To have the software deduct a small employer's relief from your owed taxes to HMRC, you'll need to select the appropriate checkbox or toggle. Again, please check with your software provider if you're not too sure how to action this. And now we have another poll for yourselves. So how have your year-end preparations been going? If you could please just answer the poll at the bottom. Again, it's just in the apps and poll section. Just give it a few minutes. Okay, so still a few more coming in, but looking at it just now, we've got 43% who say that's okay, but still a lot to do. 38% for good, they feel on track. And we've got 10% for it's been difficult but manageable, and also it's been stressful. So it's obviously good. It's always like a difficult time at this time for payrollers and obviously finances in terms of having to close down accounts and close down payroll. And it's always good to have your checklist in place and start working on it as soon as you can. So when it comes to the end of the month, you are prepared for it. But we hope that this session has obviously helped you with that. Again, any questions you may have, please just put into the chat box, or you can reach out to us separately on that.
Thank you. And thanks for voting. It's really useful for us to know how you're feeling about it. Hopefully after this webinar, you're going to be feeling a little bit more prepared anyway. Even just knowing what legislation is coming up is going to be really helpful. We have a few things that we would suggest doing to make you feel on top of things. So firstly, get started early. So if you're using PayFit and you've already finalized February, your March payroll is open and ready for you to take a look at those final calculations for the end of the tax year. Next is to make a list. So review the processes that you need to follow for the end of the tax year and starting the new tax year, and tick them off as you go. We're going to be pointing out some handy resources soon that will include a couple of checklists that will help you make sure you capture everything. Review the legislation changes to check which of them might apply to you. You might need a list of employees' hourly rates to check. or you might have a director who's on a non-cumulative national insurance method, whose national insurance might be quite different this month. Next is communicate with other members of your business. Making changes to a closed tax year is a lot more difficult than making changes in the following month. Communicating perhaps an earlier deadline for the March payroll will make sure that you get all of those changes in time and there's no last minute. You have that chance to make those last minute changes, reducing the chance of having to make a correction to a closed tax year. And finally, consider using an HR integration, because that can help capture those small changes that could make a big difference. So nobody wants to miss a salary increase or an employee's name change, especially when you're producing things like the P60 at the end of the tax year. So as well as making sure that you capture all of those, it's also going to be a lot less work for you if that's being done automatically instead of you uploading those spreadsheets, or even worse, manually entering that HR information. Okay, so how can PayFit help you with your year-end? So the short version is that most of payroll year-end happens automatically in PayFit. So there's no installation, there's no legislation changes that you need to apply. When you close your March payroll, the P60s are created at that point and they're distributed to your employees. We'll also send your final submissions for you. So we'll be sending that indicator to say that it's your final submission for the tax year. When you're closing your March payroll, that also opens your April payroll, where the new legislation will automatically be applied, and we'll be applying any of those P9 notices that you receive from HMRC. The month one indicator that normally clears at the end of the tax year will also be cleared as you move into April as well. Some additional features that might come in handy are the reports. So to view year-to-date reports for any tax year in PayFit, if you click reports from the left and then the company reports, in the top right-hand corner, you have an option to choose which month you want to run it for. So as long as you're choosing a month that's within, for example, the 2022-2023 tax year, you can run off either reports for that month or reports for the full tax year to date. Similarly, with the payslip breakdowns, which I think will be really useful for those national insurance calculations, if you need to view a payslip breakdown for a month that's already closed, you can still view those by going to reports from the left and then payslip breakdowns. And again, you've got that drop down in the top right-hand corner where you can choose which month you want to have a look at.
Thanks, Rebecca. So as Rebecca says, we'll have some resources for yourself to help you prepare. So we will be sending out an end-of-year compliance checklist for end of year and start of year, and also a blog on the 6 key changes affecting the new tax year. These will be available to all attendees and will be sent to you via email after this session. If you actually use PayFit, you will have access to our Help Centre articles where all this information is held. So please head over there to view the content and obviously all other useful articles that we've got there. And that is the end of our session. Thank you very much, everyone, for coming on. We can see that we do have some questions in the chat box, so I will go through these. So the first one we've got is from Pauline. Will this be recorded so we can refer back to it? Yes, Pauline, this is being currently recorded and we will issue this back out to all the attendees for you. Joanna, I have sent a letter to HMRC to register for PSA and still no reply from them. Chased a few times but no responses. What will happen if I miss this year's registration? Rebecca, do you want to answer that one?
Yeah, of course. So if you sent that letter already about the PSA, as long as you've got proof that it's been sent to them and it was sent on time, then you would be okay to continue with that. Obviously, you're probably going to have an argument with HMRC when they come back. But if it's something that has been approved in the past, then you should be good to continue with that PSA anyway.
Thank you. We now have a minimum wage question. I pay on the 16th of April for days work between the 16th of March and the 15th of April. When would I apply the minimum wage rates?
Okay. So if you are paying hours from the 16th of April, so 16th of March to the 15th of April, your first full pay reference period that falls on or after the 1st of April will be the pay reference period that is the 16th of April to the 15th of May. therefore you'll be paying the new hourly rates from the 16th of April instead, which is likely going to be your May pay date.
Perfect.
Yeah.
One from Paulina is, will P11D and P11DBs be submitted automatically on PayFit?
I can definitely cover that one. So within PayFit, you will need to confirm that you've entered all of your benefits information. So as long as you've entered your benefits, whether they're payroll or P11D benefits, by the end of the tax year, from the left, you'll choose benefits, and then there is an option to submit your P11Ds, and you'll go through 2 or 3 screens. One shows you the relevant dates. The second screen shows you a lot of really useful reports for reviewing your P11D information. And then when you click on the third option will be a little toggle to say that you confirm that all of your benefits information is complete. So once you've toggled that, the next time you run your payroll, that's when the P11Ds and your P11DB will be created. And then we will submit those by the 6th of July. So given that you need to do this before you run your payroll, we recommend that you do it in May at the latest, but if you do it in June, we'll probably still manage to get it submitted on time for you. And if you don't do it in March, you can still do it in April or May or June. You'll have a new section on the left that is the benefits for the 2022-2023 tax year. So you'll just go in there to review the benefits information for the old tax year.
Perfect. Thanks, Rebecca. And other benefits one, obviously benefits is biggest paid at the minute. Have you added electric vehicles to PayFit benefits set up yet?
Yes, so you are now able to set up an electric vehicle in PayFit. So you'll set up the company car. You will need to set up the salary sacrifice deductions separately, but they have no impact on the taxable benefit anyway. We are looking at including a bigger feature, which is that the salary sacrifice contributions are linked to the company car, but ultimately they don't actually have an impact on each other. It would just be a nice to have, so we will be doing it soon. But in terms of compliance, you can add the company car and the salary sacrifice deductions.
Perfect. Thanks very much, Rebecca. Our moderator has now added in both of those links into the chat, but we'll also make sure we email them out to you as well, so you can actually access them just now if you want. Okay, so John's came back saying thank you, Rebecca. It's the first time we are registering for PSA. And Ryan says also thank you for the national minimum rates question as well, and Paulina also. Ryan has asked another question. What do you think is the biggest change for this tax year?
I think it's probably going to be it's not national insurance. I think it's probably going to be the tax changes. And probably the fact that, I mean, to be honest, the biggest change is that we don't have many changes this year. We normally have, for example, a change to the tax bands or a change to the thresholds, but that basically all happened last year or a few years before. So the biggest difference is that there are no changes this year, and it's just kind of getting back to normal, back to the rates that we're used to. So yeah, I think that's probably the biggest non-change.
I would agree. I would say, especially living in Scotland myself, that the tax changes in Scotland is the biggest change that we've got. Obviously, living in Scotland, and depending on how much you make, you obviously pay more tax than you do in England. So obviously, we're increasing from 41 to 42 on one of our brackets, and then 46 to 47 other ones. So yeah, I think that's the biggest change that's affecting. 45 to 46, sorry, and the threshold for that. So yeah, I would agree that the biggest one is tax. We've got one from Jenna. How do I need to submit my gender pay gap information to HMRC?
It depends on how many employees you have. If you have 250 or more employees throughout the tax year, then yes, you will need to submit your information to HMRC. The deadline for that, if you're a private sector company, then the deadline is the 4th of April. So it's just less than 1 year after your snapshot date, which is the 5th of April, 2022. If you're a public sector company, your snapshot date was the 31st of March, 2022. So your deadline to submit it is the 30th of March, 2023.
Perfect. Thank you. And is anyone got any more questions before we send anything, before we close down?
Or any pirate jokes? I'm all for it.
They look absolutely fine. Oh, we've got one more question coming in. Perfect. Right, okay, everyone, I think that's us now finished. But what you can do is, if you have any further questions or you would like to see PayFit in more details, please just get in touch and we can prepare a demo from one of our sales team if you think that PayFit may be a good fit for your company. And again, we would like to thank you all for attending this webinar.
Thank you, Glenn.
Very much, Glenn.
Thank you very much, everybody.
Thank you, everyone.